Afternoon all. So I've just had a massive sneezing fit before I came on air. And then my eyes were watering. Something's got up my nose. Probably the markets, but hey, how's everybody doing? Sorry, if I go into a massive sneezing fit, nothing I can do about it. How you doing? Morning, afternoon even. Peter, Baggy, Jimmy, Evans, Andres, Virginia, Jerry, Paolo, Brian, cheers. Would be nice. Afternoon, Easy. Afternoon, fellow Swiss haters. Swiss hater? Why are you being a Swiss hater? What's the Swiss done to you? Oh, it's going back up again. 125 on oil. Oil's having a moment. Swiss franc, the market reversal alerts EA shorted this morning. My pen. Shorted the Swiss franc moves. Where's the pen? Goes into a different corner every day. Afternoon, Daniel. Jimmy, day trader. So yeah, we have really nice tight reversals on the Swiss franc move off of the interest rates today. Swiss yen got a long on that. Not sure about that one. But all the other Swissies, pretty much good reversals off of the RSI stroke ADR moves, whichever you will have taken. They're extended on the RSI on the hourly, and obviously extended on ADR as well, as you can see. So, yeah, taking some of those big moves today across the board. So this morning, we had the SMB rate come out as 1.75 on a forecast of 2. The problem with the Swiss National Bank is they are total radio silence. You do not hear anything out of the Swiss. They never say anything. It's just they don't talk. So when you get a press conference, it's like everyone listens because they just don't talk. They don't let anything out of the bag. So every forecast you get is like real lottery. But yeah, 1.75 off of a 2. So it remains to be seen if that Swiss franc is going to rally. So the Swiss franc trades that I've got, Euro Swiss, I've got a stop loss at break even on that one. US dollar Swiss, I was just about to do that before I came on and I forgot. So US dollar Swiss, I'm going to break even that one as well. So I'm not worried if this rallies. I don't care because I'm not in it really, apart from I'm in the CAD Swiss. But these two brand new trades, either they're going to make a nice amount of money, we're going to get a 200 ADR move back down and return to origin, or we're not, and I'll stop out. So I'm happy to hold these two, but I'm not going to risk them. I'm not going to turn them into position trades just in case. Volatility is starting to expand. We're getting big moves. We've got big news coming out on fundamentals. So what I don't want to do is get into a load of position trades right now. So I'd rather stop them out or take them, whichever. CAD Swiss, third position. Third short taken this morning. M5 reversal alert. So same thing. Also done a drawdown control this morning. Look at the drawdown control. Not being funny, but do you want to get any more accurate with drawdown control than that? That is exactly to the pip 1.5 ADR from that previous move. You literally couldn't get it any tighter. Me getting it as wrong as you can possibly get. Well, not me, the EA. Getting out. 1.5 ADR from there. To the pip. Anyway, so second scale out done on that one. Annoying, but anyway. DAX this morning didn't get the gap fill this morning. Interesting. So we didn't get the gap fill, which we normally do. So there is still an upside target. We've got another gap upside target above all this from last month as well. So there's still upside potential. But this area down here we identified this morning. So in the live room this morning, it was just a total whipsaw for the Swiss franc. announcement, the Swiss franc announcement came out. The euro didn't bat an eyelid, didn't move at all. So when I left the live room this morning, I said today's either going to be an ADR day. An ADR day, which was up at yesterday's high. And then I'll get out there and short back down, or I will let it run south if it breaks south, and then I will take a reversal at these previous levels, which are weeklies. So these 2 weekly lows from back here and there, which you can't see because it's under my head, but that is a weekly low, and that is last week's low. So that was the support area, which we got the bounce at. So nice short, got out with second entry longs, banked $700. So nice little trade. So the DAX worked well this morning. We'll see how we get on with these US indices. There's tons of ADRs. So what we'll do is we'll have a look through everything today. We'll just whiz through all the pairs this afternoon. So SMB press conference, negative. The UK rates down. We were expecting a 5.5. We got a 5.25. We had an initial spike down on the pound, but it pulled back quite a lot, mainly because the actual decision was split. So 4 of the members decided that they wanted to increase rates. 5 of the members decided that they wanted to freeze rates. Nobody obviously said they're going to drop. So that's a real split decision. Still bullish. If we were getting what was forecast there, which was everybody increasing, then it would have been a different story. But the market doesn't seem to be overly concerned about this drop. And we had an awful lot of noise coming out from Bailey, or from the Bank of England, basically, regarding we will increase if necessary and if inflation stays stubborn, and it is staying stubborn. We've only dropped by 0.1% year on year. We've got 1 minute to the open. So not particularly bearish, not bullish either though. So the market is still factoring in 64% increase in 0.25 next November. So we are still forecasting an increase next month. But that will change dependent on what happens with the CPI figure next time. US unemployment claims came out as 201 off of 224. So is it ever such a slight better number, slightly bullish US, but not dramatic. So this afternoon, we've got Lagarde speaking at 3 o'clock. Then we've got existing home sales, which won't do a lot. So Lagarde is the next one this afternoon, but not sure we're going to get a massive piece of news out of her, because she said everything last week when we had the euro rates. So US indices gone long on the Dow, long on the NASDAQ, long on the S&P. So let's have a quick look at where we are with those. So Dow, we're down at a weekly level. Nvidia's hit RSI low. Sorry, I forgot I've still got Nvidia on my RSI dash. Let me just take that off. I was just testing something for somebody that was interested in using RSI for stocks. We're at this weekly low. So this is 2 week ago's low. Failing that, we've got the monthly low, which is around about 175 ADR. Sorry, 150 ADR, 125, 150 ADR, somewhere around there. So the Dow has got room to move. This support, it hasn't held. We've broken through it today in the Globex session. It's just pushed back up again. So it may act as a support. Got a lovely propulsion gap target to the upside there, and a further one up there as well. So either this is going to be the large range, or we're going to remain within that range for the foreseeable. So we'll see where we go at the open. S&P, very similar. We've broken down. We've got this level here which is a previous low. It's not a weekly. It's in the middle of weekly ranges. So that's the 3-week low. So the weekly levels were 1, 2, 3, 4, 5. No, that is 4 week ago's low and high, and then that's last month's high, so low rather. So we have got a valid level at ADR, so that may be finding limits there. Failing that, we'll be looking at 150 ADR to the downside. Upside, there's tons of room on everything. So if it goes long, it can run for as long as it wants. But downside, we have got some bounce points potentially coming up. 100 to 125 ADR on the NASDAQ. So we'll see where we go. Markets look like they're breaking long, though, at the minute. Oh, no, they're not. So hedged on the Dow. God, that was a quick move on the Dow, look. Quick pop out the high and slam down through the lows. So hedged on the Dow, just about to get hedged on the S&P. NASDAQ sitting, deciding at the moment. These breaks are awful. It's literally, we had 2 weeks. I banked 50 grand in 2 weeks. Every break, virtually every day, was just a screamer. For the whole of this week, every single day this week, every single break has been a whipsaw for a good 5, 10, 15 minutes, half an hour, just not going anywhere. It's just bizarre. Just the market is just totally undecided. It opens and it goes, I've got no idea where I'm going. I'm going to flip around for about half an hour and then it might move. Awful. It literally everything. The indexes are awful. The FX movements are awful. Every news event is awful. It's just awful. It's just this whole month of September has been shocking. There's nothing working. Nothing working. Everything is just a mess. So roll on October. As soon as September's finished, I shall be delighted. Reset, start again. Let's trade in October. It's just a nightmare at the minute, but it'll change. You have to go through this crap to get through to the profit. But yeah. Anyway, it'll fix itself. Evening outro. Ismet, afternoon from Turkey. Hamza, afternoon. Abdul, this month seems dull. Depends what your class is dull. Painful, pulling teeth, dull. Yeah, for a lot of it, yeah. But then when it's not dull, it's hideous. It happens. That's trading. Dow is coming down to pre-market lows. See if we get a break short. If we get a break short, we're not far away from ADR today, actually, on the Dow. S&P's rallying back up. NASDAQ's rallying. So looks like I might get a clean break on the NASDAQ. S&P to the upside. Dow coming off pre-market lows. See where we go. But yeah, if we can get one of these over the line, I'll take it today. In fact, I might close. Close both or go for the run? I might go for the run. Let's see if we hit target first. It'd be nice to get one over the line, wouldn't it? Right. RSIs. It's quite a few RSIs and we've got quite a few ADRs. So I think the best thing to do really, everything is extended today. So if we whiz through everything, we'll cover all the RSIs and all the ADRs at once and we'll just analyze basically every pair and see where everything is. That's the easiest thing to do because as you can see, we've had a massive amount of Australian and New Zealand movement, which we got off of the New Zealand GDP overnight. We've had the huge move off the Swiss franc because of the unexpected rates. We've had the huge move off the pound because of the unexpected pound news. The US obviously flickered a little bit, but a lot of stuff has moved today. So we need to kind of have a look through everything and see where everything is. So the best thing to do, I think, is just to crack through every pair and see where we go. Looking like we're running into a little bit of weakness on the NASDAQ. It's the only market that's broken long at the moment. The other two are struggling to find any buyers. just have a quick look at what the US is doing. Yeah, US dollar's weak, which would indicate more strength in the indices today. We'll see. So just to cover the pound US dollar, for those that are in with me, if you are, I am long one aggressive from the news. So the news spiked down, and as soon as it retraced 50%, I went long on the anticipation of this being a fake move. I have a second aggressive, which is above the wick low before the news. Yeah. So if we break above that wick and hold above that wick, it means that this news move has been undone. Yeah. If we break and push back into that wick, which is what the propulsion gap is basically, there's a propulsion gap there. Just about see it, but it's grayed out now. But that was the propulsion gap. So this wick here, if that breaks and they hold above that level, adding a second, because it's a chance we're going to get a V-shaped recovery. If they can follow through on that V-shaped recovery, I'm adding a third, which is above this high, which is the reversal alert. So if we get the reversal alert, I'll be adding a third. And then that average will be down here somewhere, and I just need to get to that high to get out. In fact, I can get out anywhere I want when that comes down to there. But I'm anticipating at some point, you know, we've had a massive CPI drop. We've had a negative interest rate increase, which is not what we were expecting. Both bearish for the pound. Look what the pound's done today. That's what I said in the Telegram group or this morning. Can't remember which. I think it was a Telegram group. I said, give it 2 hours. Wait for that news to kick in. Give it another hour after it, and then we'll see where we're going. The market is not continuing this move at the moment, which means they're not interested in selling off the back of all this bad news. The US dollar has just had positive news, and the pound is gaining against it. So they're not interested in buying the US dollar either. So that indicates that we could have pound US dollar strength coming through, but we really need to see some follow through. This is part of the problem we're getting at the moment. We're not getting follow through on anything. The market is just making big moves on news, and then it's stopping. Then it's big move on news, and then it's stopping, and it sits there and it waits for the next news event. So not conducive to any type of trading really, apart from news trading, which is incredibly dangerous. So we'll see what happens. But I've got one aggressive on. The stop on these, every single one of these aggressives, the stop is 1%. Yeah. So all three of those positions, it's a 1% stop. So it's a 3% risk across the board. I'm either getting out or I'm getting out. I'll be done with it. If it doesn't rally today or it doesn't hold so that it can follow through tomorrow, I'll be done. US. Can't lose any more on it. It's too costly at the minute. Just quickly before we go and have a look at the FX pairs, Dow has just broken through pre-market lows. NASDAQ is failing at the highs at the moment. S&P is just in a mess. So really messy open again today. Absolutely crazy. We haven't had one decent break this week. It's been a nightmare, hasn't it? Never mind. Right, oil. Let's start there. Just catch up and chat quickly. US 30 didn't trade for some reason. Pass. Does my magic number have to be different to one I've used on the NAS? 100% yes. Outro, read the manual. This is not the manual. This is not for me. This is not for my products. My MT4 in general, every EA has a unique magic number. It's just how the system works. You've got to have a separate magic number so that the EA knows which trades it's managing. Some EAs don't use magic numbers. They will also conflict with everything else. So the best practice guidance given by MetaQuote software is to use magic numbers with your EAs so there is no quibble as to when it takes a trade. It only manages that trade it took and cannot get confused. Use the same magic number on two instruments. Both of those EAs will manage every trade that you take with every EA. I have said this for years. It is in every documentation. Big bold letters everywhere. There you go. I've said it again. Peter, what if October will be the same? We'll be stuffed. I don't know. I've been trading for a long time. I've been position trading for a long time, and I have not experienced a September like this off the back of an August like we've had. Yeah, this is not normal. But what is normal? Yeah. We thought trading was normal until COVID hit. Then we thought after COVID we'd got back to normality. Then we realized we hadn't. Then interest rates started to go up and we thought, oh crap, everything's being run by interest rates. That's different. We haven't done that before. Now interest rates are hitting peaks. We've never traded through interest rates hitting peaks. We don't know what the market's going to do. There is no normal. It is what it is. So you either identify, adapt and survive, or you die. Unfortunately, that's trading. This is why there's no strategy that works all the time, because the market is different all the time. So best example I can give you of that is the S&P 500. Yeah, I've shown you this many times before, but yeah, this is a normal market. This is an abnormal market. That has never happened, ever, in the S&P 500. We've never had a bear volatile market for a year with that much volatility in it. We've never had a market rallying so hard when every single company in the S&P 500 is losing money off the back of COVID. We've never had a stock market rally like that. Yeah. Imagine if you suddenly earn less than your mortgage and you can't pay your bills. Do you think your price of stocks would go up? When your company is failing and your sales are plummeting and you're closed, do you think your stock should go up? That's not normal. That's not normal. This, we've no idea what it is. Yeah, this is COVID. That's where it started. And we've been in a chaos situation since then. So I'm not actually surprised by this month, but what do you do? The new norm. What is the new norm? That's the norm. Pullback, rally, pullback. That's actually a bubble pop, but rally, pullback, rally, accumulation, rally, COVID. What the hell? Oh my God, we're back to here. Hopefully we're resetting and we're going to do that. I don't know. Nobody knows. Not even the Fed. Look at what the Fed said yesterday. They don't even know what's going on. What chance do we stand, eh? There is no norm. Sorry, I can't be any clearer. Jerome and John are still at it. Yep. Good old Bailey. Actually, that's something I wanted to, just before we do that, I just wanted to look at what the SNB said in their press conference. Because the SNB, they didn't say anything. It's interesting. Okay, so like I said, the SNB are so tight-lipped, they never say anything. So they had a press conference that didn't actually say anything that actually impacted the financial juice enough for them to highlight it. So there you go. That kind of says it all, doesn't it? That's interesting. Inflation forecast for the Swiss from here on in is flat until 2026. So because they're not expecting inflation at all, they're going to maintain that 1.6, which they've got at the moment. There should be absolutely no movement in the interest rate on the Swissy, which puts it back to stability. The safe haven it should be, which means if that is the case, this Swiss bank movement this morning should just be undone, because that is not a move and they're expecting no interest rate change. So we should be back to here, and then the banks will be able to go where they want. I think this is a great fade opportunity on these today. We'll see, but certainly starting to look like it now. Afternoon, Neo. Every year is not normal since 5 or 6 years. Well, yeah, it's not normal since COVID, that's for sure. Yeah. But, you know, this is the thing. Everybody says there's lots of conspiracy theories out there, but every 10 to 14 years, the stock markets have an utter catastrophic event of some description. So if you go back and look at stock indexes, they're manufactured to go up. Yeah. So they are manufactured to rise. This is what stock indexes are. They measure the stock price of companies. Companies are manufactured to increase stock price to please shareholders. If shareholders are not pleased, people lose jobs. And I mean the guys at the top earning 200 million a year on the board. Yeah. So it goes up. It's manufactured to go up. They manipulate the figures to make the stock price look better so that the index rises. Back in 2012, we were trading at 1385. Inflation hasn't driven it up to the levels of 3,000, double what we were then. It's not inflation doing that. It's inflation of stock price. Shareholders being pleased. So this is what it normally does. You'll see that every now and again we get a blip. These blips are financial crashes. They're housing bubble pops. They're IT bubble pops. They're pandemics. They're things that reset the market. This time round, however, we had the biggest blip we've had in pretty much the history of the stock market, followed by the largest rally we've pretty much ever had in the stock market, followed by the largest bear volatile run we've ever had in the stock market. Yeah. So these last 3 years, we've never experienced any of these situations before. So nobody knows how to handle them. So you have to change very quick and adapt to what the market is now doing. The speed of this movement during the recovery from COVID was unprecedented. The speed of this drop is unprecedented. We've no idea what's coming next. We're at the hard right edge. And at the moment, it looks like we are possibly flagging for a new leg up. So are we going to go back to that, or are we going to go back to that? You need to kind of pick one, because we don't know what's coming. And this is the same with all strategies, position trading in Forex. It's held up beautifully for the last 3 years. I've been live streaming on here for 4 years. I've been position trading for that long pretty much, and done absolutely fine. There's a lot of people panicking at the moment going, oh, the last 2 months have been crap. Yes, they have. But the last 48 months have been brilliant. Yeah. Just because there's a couple of bad months doesn't mean it's all going to fall apart. Yeah. So try not to panic so much, everybody. It's a blip. We have them. What do you think about ICT? Don't know. Never met him. Is he actually legit? No idea. Or just another repackaging of SMC? Well, if you ask him, he invented SMC. If you use any of his terminology, he'll sue you because he's the god of trading and nothing that he does has ever been stolen from anybody else. No, the fair value gap was not stolen from M.A. Perry, who invented it in the 1980s. But he won't tell you that, will he? I'm not saying he stole it. I'm just saying he repackaged it. You think everything else he sells is repackaged? I don't know. My opinion. I don't know him. God's sake. Hedged across all 3 indices. Well, I'll come back to those this afternoon at some point. I'm not interested anymore. I'm losing the will to live. Right, oil. Oil's off again. So we looked at the pullback this morning. We were looking basically for a 38 retracement on this current leg. We've pulled back into basically 23. Didn't make it back to 38. It's off. So any kind of pullback you get on this is a buy at the moment, basically. We're looking at $95 a barrel. That's Goldman Sachs and everybody else's forecast. So that's the forecast we were given in December last year. That was revised back down from 107 a barrel. But unfortunately, what we did all year is nothing. Again, oil's not done this before either. Yeah, we're talking about unprecedented things. Oil's not gone sideways for a year before, especially after a major conflict kicked off. It's just everything is abnormal at the moment. So push up, continue up to $95 a barrel, and then potentially up to 107, which was the original forecast. So we didn't get that measured move that I was talking about this morning if you were in the live room, which would have been a pullback into the 24.72, and it looks like it's going again from where it is. So Canadian dollar, again, should be seeing a rally in the CAD. So if you look at your CAD pairs, not doing a massive amount, are they actually at the minute? Pounds being held by the CAD. US is being held as well. So there is potential for more pressure to come through on the Canadian dollar if that obviously continues to rally. So just be aware of that. I haven't managed to get into this at all, oil. I've been too preoccupied with pullbacks on it to actually make any moves. So this was the one I called out, which worked absolutely beautifully, but I didn't actually take it. So I'm very much a stickler for waiting for pullbacks before I get into anything, and this just isn't pulling back far enough. It's more of an accumulation break. So I don't know, but longs on oil, longs on CAD. So looking at everything at the moment, we look at what the bias is across the currencies at the moment. So with everything at the minute, we are still kind of sitting sub 7 on a bias. So there's nothing that's got a real fundamental bias at the moment because everybody's increasing interest rates. Everybody's inflation is stubborn, either stuck or increasing. GDP is dropping across the board or staying stable, and unemployment is rising. So every country is in the same boat. Therefore, every currency is of the same strength, not strong, not weak. So there's no real biases anywhere at the minute. Most of these biases are being changed by retail sentiment, which means basically they're going the wrong way. So the reason this is a +6 at the moment is because everybody's shorting it, which gives you a reason to buy it. So you take retail out of the equation, that suddenly becomes a 4, which is no bias really, or a +2, which is a range-bound bias. So there's really no biases anywhere to worry about until we get someone making some kind of moves about we are definitely going to do X or Y with interest rates, and we are definitely seeing inflation either doing that or that. Everything is kind of neutral, which is why we've had this hideous period of complete sideways movement. So we've had low liquidity through summer trading with absolute indecision in the market, which is why we are where we are. So pretty much everything should be able to be taken long and short. So looking for support and resistance areas, basically to trade from and to, and RSI extensions to the downside. So when the banks have made big, strong moves, we're looking to take those retracements in the opposite direction. So nothing's really changed. And hopefully we're going to get the volatility pick up now. I don't know. We'll see. Emmett, I feel like the Dixie will keep going higher. Could do. We will see. So Aussie dollar, CAD, the Canadian dollar potentially has a strong bias. We're pretty much neutral on the Aussie and the New Zealand at the moment. So obviously, as you can see, it's coming down because the CAD bias is strong. Oil is also strong at the moment, which is the main export for Canada. So obviously that's going to help them. So more shorts than longs, staying in line with trend obviously is the best thing to do. But there's very little opportunity to get into this at the moment. As you can see, it's not really going anywhere. So today we've had an ADR hit to the downside, and reverse alert has kicked in, just kicked in. So we actually had an ADR hit here, look. So your first reversal alert would have been on that candle there. Didn't hold, just went sideways. We had a second reversal alert there, which you are currently in, and a retest. So there's your retest. So potential push back up on Aussie dollar CAD. However, oil is screaming away at the moment. So that might be tricky. Not extended on the hourly. So the only thing you can do there really is an ADR reversal and take it back up into that propulsion gap or up into there. And then potentially look for next leg down. Aussie dollar Swiss. So Swiss franc, I'll cover all the Swiss francs in one go. As we know today, the Swiss decided not to increase their interest rates. They were forecast to. If you look at the history of the Swiss and their interest rates, there's not much of it, but it's very, very rare. They do not do what they say. Yeah. So I mean, we're only going back to 2019, so it's not a great sample here, but there has only been one time they haven't done what they said they were going to do in the last 4 years or so. Yeah. So this is pretty unprecedented for them to decide not to increase their interest rates. But when you look at the market reaction to it today, it is obviously a holy crap. We didn't anticipate that, guys. Get out of your Swissies. And then the analysts going, well, actually, when you look at it, all we're going to do now is go sideways. because they're not going to increase it from here. They're not going to decrease it because they're expecting stable inflation. So the market's now undoing that move. So all these Swiss franc ADRs you've got today, which are ranging from 100 to 225 ADR, depending on how strong the cross is, potentially will just return to origin, fill that propulsion gap, and then back to business as usual. So Swissy should remain safe haven. If we get any problems with any other currencies, you should see the Swissy benefit from that, like US dollar drops, etc. So I think it's probably back to business as usual, but we might find a weaker Swiss franc moving forward for a few weeks while the market kind of digests it. Don't know, we'll see what happens. But initially, these are all good mean reversion opportunities. So you got Aussie Swiss, ADR, what do we get? 125 on them. So you can see them all here. Aussie Swiss 125, Euro Swiss 225, Pound Swiss 175, New Zealand Swiss 150, US Swiss 225. So big moves. So there's your CAD Swiss, big move up. Reversal alert was there on M5. A nice tight reversal alert up there. There's your structure break. Enter. It's just going sideways at the moment, so that would indicate that obviously this is the propulsion gap where the buy happened. It would indicate that we found more buyers there, we found more buyers there, we found more buyers there, we found more buyers there. So we are finding buyers that do want to buy this. However, they can't get any follow through because there's a lot of selling pressure to get out of this long as well. So we're stuck. This break will tell us which way this is going to go. So you want stops on them if you've taken them, basically, because if this is going to run and they are going to devalue the Swiss moving forward, don't forget the euro rate didn't help either. We could find ourselves on a multi-day, multi-week run. So I'd rather not be in it in drawdown at the moment. So I'm just protecting any of those. Euro Swiss, way above 225. I mean, I don't know what that is, but that's a lot. More than 225 ADR, isn't it? ADR on this is 37. ADR is 37. We put in 113. 40, 80, 120 is 300 and something ADR, isn't it? So huge move. But again, same thing. Short reversal alert, protected. It will either return to origin, in which case I'll be out with a very nice profit, or it will just stop out at break even. Pound Swiss. Already reverted, already undone it. That's done, dusted. Reversal alert again up there, 175 ADR. That was your reversal alert. Return to origin done. Unfortunately, that one didn't get extended on the RSI, so I didn't take that one. New Zealand dollar Swiss, again, nice reversal alert. Your reversal alert initially was there, then it got invalidated. And your second reversal alert went in there. Nice drop on that one. But again, as you can see, this could just be a flag looking to break long. We need to wait and see. This afternoon session should hopefully tell us. And US dollar Swiss, same thing. So that's coming back up to potentially break even. Gone absolutely nowhere. So we are finding buyers here for the US dollar Swiss and all these Swissies, which means there is potential. They do not want to buy the Swiss at the moment. They're looking to get rid of the Swiss. So buying everything against it at the minute. So we'll see what happens. But all of those big extensions on ADR, big extensions on RSIs on a lot of them as well. Yeah, so that's an RSI extension. So that's an H1 RSI mean reversion M5 entry. So where did I get to? Aussie Swiss. All the yens, I'll cover all the yens as well, because the yens, I'll start at the back actually. Let's go US dollar yen first. So US dollar yen, we're looking for intervention. So overnight, the Japanese came out again. For those that you weren't in the live room this morning, Powell. We will can't say it. We will respond appropriately to FX moves if necessary. So this is day 3 on the trot of the Japanese saying to the US, if you continue to devalue the yen, we will intervene. So we've had this high, which we got up to, we had warning shots at 145, which was back here. Yeah. They pushed up. We had warning shots fired here. Broke down. We tested it. Couldn't get through for 3 days. Had a little pop. Again, nobody had the balls to push through it. Yesterday's FOMC drove it up. We drove it back down again today. So it looks like they are holding this level, 148 at the moment. If it breaks 148 and it holds above 148 and we then start to rally up to 150, the Japanese will have no qualms about just firing a load of yens off and bang, this will come straight down. So be a little careful with the yens, but that's what's creating this strength in the yen. So we're getting these intermittent pushes in the yen at the moment. And it's basically no one's really wanting to sell too much yen at the moment because it will devalue, and obviously that will then get an intervention. So if you look at all the yens, they've all had this rally. They're all getting powered back up again now. So there's a nice H1M5 entry there. A nice quick in and out. The pound yen, that's been coming down anyway because the pound has been so devalued. So that one has been a sell anyway because of the pound weakness. Euro yen pretty much the same. Euro devalued off the back of the interest rates. Sorry, there. We haven't recovered since. So still pressure down there. Swiss yen, obviously, now today, though they've sold the crap out of the Swiss. This buy is the one that I don't really want to be in. So I'm hoping that we get this devalue in the Swiss, but that's a tricky one. I'll wait and see what happens with that over the next couple of days. And CAD yen, that was a straight in out. So we got the H1 RSI extension on Tuesday. Just got out of that one today. So that was a straight in and out 2 day. Nice, easy trade. Aussie dollar yen, same thing. Straight in, straight out. So I was into that one yesterday, out of it today. Helped along by the Australians dropping off the back of the New Zealand news. So that's a nice big collapse. This is a very, very typical yen move. Climb up the stairs. You'll hear me say it lots. Climb up the stairs, fall down the elevator shaft, 50% retracement. So yeah, that's the yens. Aussie, New Zealand, totally sideways. The Aussie and the New Zealand move together. When they get news, the other one reacts. So they tend to push and pull at the same time, which means you get an awful lot of sideways movement on it. However, when one of them goes out of sync, increases interest rates, and the other one doesn't, or decreases, which really isn't happening at the moment, you get these big, strong pushes where it will push for weeks and weeks and weeks in one direction and then pull back as strongly in the other direction. So it can be very squeezy. At the moment, it's not going anywhere because they've got the same goals at the moment, which is getting that inflation down. So again, you can take it in any direction. I've only had one on this. And there was one in there as well. But it's coming down to the lows at the moment. So we're down at the weekly lows of the low of this range here. So good buy opportunity back up into fill those propulsion gaps. But we'll see. So it's bounced very nicely at the moment. So the reversal alert this morning. Oh, you haven't had one? Hasn't reversed yet because that move down was so strong. So we tapped into the support rectangle twice and it's holding. So that area where the sell started is holding at the moment. But there's a lot further upside on it. Aussie dollar, US dollar. So this is the big question. What the hell are we doing with this US dollar? Nobody seems to know. I had an out on this yesterday. Should have taken it. I took one off. I took one off there as well. I took one off there as well. So I've been taking this off for weeks, as you can see. So initial entry was all the way back there, which was the beginning of August. So I've taken one off there, took one off there, took one off there, took one off there, took one off there. So I've been banking constantly on it because it's just doing nothing but that. Question is now, what are we going to do from this low? Again, are we going to hold the low or not? What's happening with this US dollar? Nobody knows. PMI figures tomorrow. So we'll see if the PMI figures can rally it back up. But right now, there's no bullish and no bearish bias on this either. So I think next time I get an out on it, I'll probably do it and get out and be done. So really no bias on it. Again, if we do get a push back down into these lows, great buy. Last month's low, holding very nicely, as long as we don't sit through another 4 or 5 days of crap. But we're just waiting for news events. As I say, all we're doing is we're going sideways, waiting for news, have a bit of news, go sideways, wait for a bit of news. Yeah, that's it. Go sideways, wait for the news. That's what we're doing with the US dollar at the moment. It's got no real power either way. Chat disconnected then. Did the stream drop? Chat disconnected, so I don't know what that was. So that's your Aussies covered. ADR on the US dollar yen. ADR to the downside. There you go. So we've hit ADR down. Not really doing much on the indices at the minute. Bit of a sideways mess. So we are more bearish than bullish at the moment. So with these, we'll be looking for short continuations out of propulsion. That one just probably market structure. So we'll see how we go with those, but pulling back a little bit at the minute. Feel like the Dixie will keep going higher. Yes, already answered that one. Just doesn't make any sense that CAD Swiss is not already pulling back after 7 ADR move. No. There's no reason for it to pull back though. The fundamentals have shifted. This is the thing. This is a really good example of how to understand the fundamentals. We've been going nowhere on it. Yeah. And oil has suddenly rallied. So we've had a bit of a rally on oil. Yeah. We've had a bit of a push on the euro. So what we've had is oil pushing, the euro pushing, which has helped the Swiss to push. So what you've had is a bias of a CAD long and a Swiss long. That on oil, that on euro. That causes no movement, because if you've got a bullish bias against a bullish bias, you get a range. Bearish bias against a bearish bias, range. Bullish bias against a bearish bias, trend, and vice versa. Yeah. What's changed is oil has rallied for a second leg. So we've been probably 6 weeks into a rally on oil or something like that, 4-6 weeks. What we've had change is the bias on the euro. The euro dropped suddenly, which has helped the Swiss to drop suddenly, which has given that Canadian dollar and oil that bias to go long. So we've had a lot bigger movement to the upside on it. So there's no reason at the moment for it to go back down the other way. As long as the market is rallying and they can make money, and there are people up here which are willing to sell to the buyers will keep buying. When there's nobody left to sell because everybody's been squeezed out of their short positions, they will have no option but to do that, because you can't move it any higher if there's nobody left to sell up the top. Yeah, if you're looking to buy, when you're buying, you have to find someone willing to sell to you. When they run out of sellers, they can't push any further. That's the point where the profit take starts, and that is why you see the climbing up the stairs, falling down the elevator shaft. Because as soon as the first bank goes, can't get any further, take profit, the rest of the banks go, our P&L's dropping, take profit. All the retail traders go, crap, market's dropping, get him, and we just collapse. And then you get to a point where the hedge positions that are not needing to be profit taken on get added back. That's why you get market structure. So it's just a case of waiting. You've got to wait. It will happen. You just don't know when. So I've covered the CAD Swiss, covered the CAD yen, covered the Swiss yen. So I've covered all the CADs, all the Swissies rather, and all the yens. So I look at the euros. DAX didn't fill the gap from earlier. No, not yet. It's on its way now, potentially. So it's ADR basically to fill the gap. We'll see. The US is just not doing anything today. I'm not surprised, to be honest, because it's been a busy old day, isn't it? If oil goes to the level the big banks are forecasting, does that mean the dollar will weaken? No, oil's not got anything really to do with the dollar. Right. So euros, euro odd. I'll cover the euro US dollar in a minute. So euro odd at the moment, we've just stepped straight into propulsion. So there's your propulsion gap fill, just happened. Lovely wick, 3-bar reversal, at resistance, propulsion gap fill, 3-bar reversal. Can't get much better than that, can you? So the 5-minute reversal alert today was part of that on the chart updates. So there's your reversal alert, there's your retest, there's your M pattern, and hopefully we're going to start to drop on that. That would indicate a little bit less strength in that Swiss franc again as well if the euro is coming down. But so this one, we're not quite extended on the RSI there. 4-hour RSI absolutely miles away. So there's no real reason to take an extension trade on this. It's just gradually grinding down the euro, but very nice and orderly, unlike some of our friends like the pound US dollar. Not very orderly at all. So still dropping euro. Lagarde speaking. Lagarde has spoken. Let's just see what she said. Nothing. Either she's spoken and said nothing of interest, or she hasn't spoken yet. Nothing. No. Okay. So nothing out of Lagarde. We had it all last week, didn't we? So yeah, just keep pushing down, support resistance holding on the way down. So continue down. If we got an extension to the upside, I'd be interested in shorting this at the minute. Same as I would be interested, as I did there, longing it. Yeah. So doesn't really matter which way this one goes. It's going up and down nicely. So you see that was the H1 RSI extension. Position trade there. Very nice. In, out, done. So if it hadn't have been for the squeeze this month would have been another good month. It's just that pound US dollar, unfortunately. Euro CAD in long at the moment. This is quite a tricky one because of the Canadian dollar strength. So I would really like that oil to weaken a little bit more. Unfortunately, it's pushing up today. But the euro seems to be holding its ground against the CAD at the moment. So we're on day 1, 2, 3, 4, 5 sideways after the initial interest rate. So this was the euro interest rate being increased, making the euro stronger and more attractive to investment. So I'm expecting that propulsion gap to get retested. I'm at break even on it at the moment. So we've got 2 positions on. I'm at break even. Might take it off at the highs, but as you can see, my target at the moment is up in propulsion. I'm just going to adjust it that high. So just in case we get sellers re-stepping in at that level, I'm just going to get out up there. So yeah, just waiting on this one. But again, 1, 2, 3, 5 days sideways, no movement. Euro Swiss, obviously covered that one because it's a Swiss franc. Still retracing nicely. Good chance of getting that mean reversion in. That's 0.5% profit. That'd be nice. Euro pound. So the pound and the euro relationship means that we tend to get a range because we're close trade partners, same as Aussie, New Zealand, US CAD, euro pound, same thing, euro Swiss. So we are sideways at the moment. Again, you can see on this one, doesn't matter what you took, any RSI extension you've taken on this has worked beautifully. I've only had 1 trade, I think, triggered on this. I'm pretty sure I did get in on that. That one didn't get that, wasn't extended far enough. Did get one there. So just take whatever you want on it. Basically, RSI extensions to the upside should come down. RSI extensions to the downside should go up. There's no advantage on either of these guys at the moment. I would say the pound is probably slightly stronger than the euro moving forward over the next month to quarter. So you'll probably find the bull moves are faster and last longer, but it's very orderly and it will remain orderly. There's no reason why it shouldn't. No RSI extension at the moment. You are extended above the 70 level. So there is a good opportunity for a short. There was one entry there. There's another entry now. We're 150 ADR today on this. So as you can see on the RSI dashboard, Euro pound is extended on the 4-hour and extended on the hourly. So there's an opportunity for shorts on this one. You've had your reversal alert already this morning. No, you didn't. You would have had one. So there was a reversal alert here. That candle would have been your reversal alert. That's the first one you had since you hit ADR. So that was ADR. That was the reversal alert there. And obviously we had that big spike up and complete sideways movement at the moment. So good for shorts at the minute. Euro yen, we've already covered. Euro New Zealand, totally sideways at the moment. Very difficult to get into anything on this. Again, very much range bound moves at the moment. Bit of news, sit sideways 5 or 6 days. Bit of news, same thing, rinse, repeat. It's what's happening everywhere at the moment, but hopefully we'll start to get out of this cycle. So yeah, any longs or any shorts, fine off our RSI extensions. Looking at the 70-30 levels at the moment, you will have made an awful lot more money this month trading 70-30s than 75-25s, which is what I trade, because we've had a lot of more movement. So that one there, for example, would have been a beautiful short. We had a lovely long there. Not quite extended enough for me because I want it a little bit more extended so I know that we've got more bank exposure in one direction to get out on. But you never know when it's going to be range bound. I wasn't expecting it to be in September. So, you know, there's been lots of opportunities on it. But right now, no real bias on Euro New Zealand. I think the Euro is probably going to do that. New Zealand dollar, not looking great, is it? So for the Aussie and the New Zealand, we've still got a massive deficit on the inflation side to cover. So the Aussie dollar is up at 6%. The New Zealand dollar is up at 6%. Inflation is coming down, which is good. But after an inflationary drop, you tend to get a bounce and then you get a second drop. At the moment, what we're experiencing with the Canadian dollar and the US dollar is that bounce. And with the pound, to a certain extent, we're experiencing that bounce in the fact that we've gone flat, same as the euro. Yeah, so inflation has gone down and stalled. Whether it goes up or down next will be decisive of what happens with interest rates next as well. So for the Aussie and the New Zealand, these inflationary figures are still far too high as they are in the UK. So there's not really a bias on either of them. It would be more slightly bearish. And obviously with the euro being sideways, could go either way. But we'll see. It's more going to be driven by news, the New Zealand and the Aussie, and it always is. But yeah, no real bias on that one either. So just wait for RSI extensions or look for decent support resistance bounces. Yeah, so just get bounced off of support and resistance and out of propulsion gaps. Yeah, same as usual. Euro US dollar. So again, Euro US dollar, I'm out. Got the RSI extension long there. Closed that one out. Did a DD control on it. But as you can see, the Euro US dollar has been rallying hard, pushing hard against everything. Whether or not the market is going to maintain that move, I don't know. This is a nice double bottom that we are experiencing right here at the moment. So are we going to get continuation strength on the US dollar? No idea. We'll wait and see. But at the moment, the Fed is not giving us any reason to be particularly bearish on it. It's not giving us any reason to be bullish on it. It hasn't given us any reason to be bullish on it for the last 2 months, but it's been strong. So you kind of have to say the assumption is the US dollar is probably going to be the strongest currency out there, as usual, moving forward, because everything else is just so weak. So continuation to the downside on it. If you want to be safe, probably better just to stay with shorts. But, you know, it's coming down fairly orderly. Yeah, you're getting the pullbacks. As long as you're getting a 50% pullback on anything, you've got an exit opportunity. But, I mean, here you can see it was difficult to get out. The only reason I actually got out of this one there is because I took a double position by accident. So that was kind of a fluke exit. I should still really be in this, taking a third position if we drop. But Euro US dollar at the minute, I would say probably better and safer taking shorts, just because the euro hasn't really got any strength, and unless we hear otherwise, and unless the market shows us otherwise, we should expect a continuation of some kind of strength on the US, but not particularly strong. I still think we're going to get that kind of anomalous reaction to news that we've been experiencing. So every piece of positive news we get on the US dollar typically is a little bit bullish. Every piece of negative news we get on the dollar collapses it. I still think that's probably going to happen because the market is still looking for opportunities to dump it because it thinks it's hitting its terminal rate, and the Fed didn't help yesterday. So we'll see what happens. But Euro US dollar more short than long. Pound odd, all the pounds having a bit of a downturn for the last 2 to 3 weeks. We haven't been helped with today's news at all. So we've got obviously the rates reduced, or not reduced, but not increased as per forecast. It looks to me at the moment like the market has factored that in though, because we haven't had a particularly strong drop. So if you look at the pound today, the interest rate spike happened, but we're not really going anywhere. Yeah. So if you go through all the pound pairs, yeah, spike, we haven't broken the low. Forget the Swiss because it's an anomaly. Spike, we haven't broken the low. New Zealand spiked, we haven't broken it. New Zealand, pound US spiked. We're rallying against the pound. Yeah. So against the US dollar. So if this was going to be a big, strong negative reaction off of that interest rate decline or not increase off the back of the CPI figure being slightly worse than expected we should be seeing the pound dropping. We've made a new high and we've now made a higher low. So market structure, as you can see on the hourly chart here, is shifted long. So it's starting on the vast majority of these currencies to look bullish. We've had a very, very long drop. And after a big long drop, you get a pullback. Whether the pullback is shallow, medium, or deep, or we get a V-shaped recovery, nobody knows. But it doesn't look like it's particularly bearish. We've had 2 very negative news events. Yeah. So not just normal news either. We've had CPI. So the 2 leading indicators for price movement at the moment are CPI inflation and interest rates, both negative. And yet we haven't dropped this week. We have moved down slightly, but we haven't had any continuation on it. So to me, it looks like it's just bouncing, ready for the buyers to get out of, or rather the sellers to get out of those positions and start a pullback in it. We may well then add into shorts and carry on going down. But for the moment, we're holding our ground. So looks okay at the minute. So all the pounds, you'd have to say, after pulling down to these sorts of levels, we're very, very overdue a pullback. But this is not a normal market. So I'd be bullish on all the pound pairs. The ones which you're going to struggle with the most are likely, assuming oil continues, to be the Canadian dollar and the US dollar. So those are the 2 which you're likely to get the most resistance to because they're pretty much the strongest currencies. And obviously the yen. If that yen intervention comes, you ain't going anywhere but down. So it doesn't matter. This could be the strongest thing in the world, the pound, over the next 3 weeks. If the Japanese intervene, it's coming down. So nothing you can do about that one. But all the others, yeah, looking good. Market structure shifting. We got here, we had a little break. We had a shift yesterday, or not yesterday. We had a shift there. That was this morning, wasn't it? So we've had a couple of breaks, as you can see. So we've had a break there. We've had a break there. We just about got a break there. So rather than just dropping and dropping and dropping and dropping and dropping, we've now started to get rallies going, but they haven't had any follow through yet. So, but as you can see, after all this massively bad news, we also haven't had a huge drop, have we? So from the inflation figure yesterday, we've dropped 145. That's 1.5 ADR off of 2 of the biggest negative news we've had on the pound for a long time. All we've done is 1.5 ADR drop. So we'll see. Next week will tell. We're either over the next couple of days going to do kind of a rounded bottom move, or we'll just get some kind of rally started. But PMI figures tomorrow. So the PMIs we've got for the Eurozone, for the pound, and then for the US dollar. We've got retail for the CAD squeezed in the middle. But the PMI figures for all will again give us an indication of where we're going. These are the secondary inflation figures. So if we get a PMI positive for the pound off of services and manufacturing, that would indicate we might get an inflationary rise, which means that this 405 that we got today is probably going to change to a 504 in favor of an interest rate rise in November, which will give the pound a little bit of a rally. So these are going to be key figures tomorrow we need to pay attention to. So we'll find out hopefully tomorrow what we're going to get movement wise off of that. And obviously we've got the others as well. We've got the euro and the US dollar. Swiss franc again, yeah, that's a complete V-shape, A-shape recovery. V-shape, A-shape, same thing. Whichever way you want to look at it. If it goes down, it comes up. If it goes up, it comes down. It's a V-shape, A-shape recovery. So that one's done. Yeah. Pound yen we've already looked at as well. That's dropping already. There's your drop below there. All of the ICT traders and the smart money concept traders will be saying, look at that stop run. It's definitely a buy. Maybe it is, maybe it's not. Don't know. But basically, there were not enough sellers to drive short today. There were way more buyers than sellers on that news, so still bullish as far as I'm concerned. We had an RSI extension on that pound New Zealand yesterday. Just about. Didn't quite trigger the reversal alert, unfortunately. It would have been a nice straight in and out if you triggered it, but I didn't get into that one. Pound US dollar, as you know, I'm long. So second aggressive drawdown control position has just gone on there. So I've got one there. So my average on the aggressive positions is here. If we can sit and accumulate upper ADR today, ADR high from that low, that would be lovely. And then tomorrow, if we can start that move off, I'll take the third. That average will be down there and I can be out of this tomorrow on PMI figures. That's the plan. Obviously, we need the market to decide I'm right. So we'll see what happens. But yeah, as you can see, this thing I've been in now for coming up for the longest position trade I've had. The longest position trade I had was 3 months. This is the 19th of July. We're now on the 20th of September. Give it another 3 or 4 weeks. That will be my record ever. And that was on a US dollar Swiss position. So this is one of the worst squeezes I've been in. And it's not really even a squeeze, as I've said. It's, you look at the actual movement, from high to low, we're looking at 700 pips. So it's 10 ADR, which is a fair squeeze. But 10 ADR in 2 months is very, very, very slow movement for a squeeze. Yeah, I mean, normally after 4 weeks, you've done 6, 7, 8 ADR. We've taken 2 months, 8 weeks to do 10 ADR. That's an average of moving 1 ADR a week. Yeah, ADR is a daily movement. We're doing that just in a week. You know, it's just a horrible, crappy one. But we will see. New Zealand dollar CAD. So this one, obviously, we've got Canadian dollar strength, which has been driving that one down. This is pretty much the same as the Aussie dollar CAD. Yeah, very similar movement across the two because they move together. So Aussie dollar CAD, no real bias. As you can see, totally sideways, have been sideways for an awful long time. Little bit of news to drive us down to a new range. Again, range lows, range highs. As soon as we get something like that happening, hopefully that will just kick off normal market movement. What we're used to, that, not this crap that we've had for the last 2 months, pretty much. Normal market structure. That's what we're looking for. We're not getting it. So still waiting, but there's no RSI extensions on it. We haven't had an RSI extension since back here. That was the last trade I took. Straight in, straight out. But that one took 4 days for a single trade. US dollar yen, 125 ADR. Big moves down on that. CAD yen should be dropping hard as well. Out a little bit too soon on that. New Zealand dollar Swiss, we've covered. That is still holding. So Swiss franc starting to power up a little bit after the news. New Zealand dollar yen we've covered. New Zealand dollar US dollar. So that's obviously the FOMC move. Slight continuation, straight down into support, bounce, rally. So that's a nice ADR reversal this morning. So we got down to 125 ADR. There's your reversal alert. There's your W pattern. Looking good. Could push all the way back up. As I say, that FOMC move, knee-jerk reaction, could become a V-shaped recovery. It's going to take multiple days to do it, but think into the future, into tomorrow, could easily be back up there. Look at that Batman. Haven't seen one of those for a while. Can't draw. Bearish pattern, Batman. Sorry, I just spotted that out of the blue. Oh look, reverse Batman. What do you know? 2 Batmans in one day. It should really go like that. This one actually went like that, but there you go. Another Batman. Longs at the moment on this. I got out of the long yesterday on this one. Canadian dollar really throwing a spanner in the works for the US at the moment. One of the very few things the US is actually losing against oil. So Canadian dollar rallying on this, but we've had that pullback on oil, as you can see. So we've had an opportunity for a rally. We got FOMC in the middle of that, which really helped. But this US dollar, I don't think is necessarily going to be strong moving forward. It's going to be strong enough to beat most currencies, but you won't beat oil. So potentially this is the 50% retracement bounce that we're seeing. So continuation rally, maybe. We'll see. It's too difficult to tell with the US dollar at the moment. But again, with this one, very difficult to call a bias on it. As you can see, I've taken quite a number of trades on this, trying to get out of this short position. So that was the normal market movement. And then obviously we came through August very quiet, and we got the squeeze to the upside on this in the same way as we had the squeeze to the downside on the pound US dollar through August. The Canadian dollar obviously has managed to rally with oil, whereas the pound hasn't managed to rally. It's had negative news and dropped. So still think you can trade this in any direction at the moment, and you should be fairly safe. There's no real directional bias on either of these, because when the US rallies, the Canadian rallies. When the US drops, the Canadian drops. The independence that the Canadian has off the oil means that you should get decent movement. So when the US dollar is sitting sideways waiting for news, the Canadian dollar will be able to move as long as oil is rallying, which it should continue to do because the supply is still constricted. The only fly in the ointment for the Canadian dollar is if OPEC come out and decide that they're going to enforce the restrictions on the Saudis to increase production, same as the Russians. Then obviously we'll have more supply. Demand will remain the same and the price will drop. So at the minute, there's no reason why price shouldn't continue to drive, which means the Canadian dollar will be strong. If that US dollar does weaken because the market doesn't like what the Fed did, we'll be down there. However, it may rally. So it's very difficult to tell. But as long as you're scaling in, yeah, we don't get squeezed for more than a couple of weeks at a time. Absolutely no reason why you can't trade this one in either direction as well. US dollar Swiss, almost filled gap. There we go. So pretty much done. US dollars really coming down. Indices should be rallying slightly. Trying, aren't they? But no momentum. Absolutely no momentum. So we're not even 1.5 hours into the session yet. So that 1.5 hour sort of sweet spot is, you would expect the high or the low of the session to be put in within that first hour and a half. And then if we are going to get a productive move, that is when it will kick in the other direction. So if you've got no direction after an hour and a half, wait and see where the market takes it. Hopefully it takes it in one direction. Then you can look for an area of resistance. So if we drive up, we can look for that high up there on the NASDAQ, S&P. And if it's going to drive down, obviously you look for bearish support. No movement on that at the moment. So that US dollar is selling off fairly hard at the moment. US dollar yen, as you can see, obviously is down straight into support. Previous monthly high. Accumulated around it for a couple of days, came down, tried to get through it, couldn't, tapped straight into it. So if we break that level, looking for a drop back down into this propulsion gap. Wondering if this is, yeah, it looks like general yen strength to me. So fairly strong yen across the board at the moment, coupled with a weak US dollar. This is obviously at the moment kind of the perfect storm. So that's pretty much undone. So I can wipe 1% of that off at the minute. If by some miracle I can get back to break even this month, it'll be a job well done. It's going to need that pound to rally and that US dollar to really weaken. So at the minute, the pound is holding its own against that US. So if we can get continuation drop on this US and the US just accumulates and we get negative PMI figures tomorrow for the US and positive PMI figures for the pound, this will be up here tomorrow. And everyone will be going, what the problem was. Wouldn't that be nice? So there we go. That's everything covered. As I say, I don't think there's any way we can really say for sure which way anything is going at the moment. This last 48 hours is the first proper volatility we've seen in probably 6, maybe 8 weeks. We haven't had an RSI. If you go back and look at previous live streams from whenever, every week we get some kind of strong ADR movement, some kind of strength and weakness in the market. We haven't seen this for weeks. So we are getting now back into an area of movement, finally. Next week is end of quarter. So we are going to get some movement end of next week anyway. So if you have a look at where we are now, Saturday is the 30th of September. 30 days have September. So next Friday is the last day of the quarter. So all quarterly reporting needs to be done by Friday. Therefore, any targets that need to be hit, any movement that needs to be achieved to hit those targets will be put in next week. So we've got a possibility, although it's a light news week, of getting some decent volatility next week as well. So fingers crossed, this FOMC move, and especially this SNB move and this pound move, are what the market needed to actually get itself kickstarted and get some movement going. So hopefully we'll return back to normality a little bit, but we'll see. There we go. Took a sell on the euro US dollar an hour ago, Emmett. That's a bad move, wasn't it? Closed at 1R after a bearish news on the dollar. Cool. You have no clue what will happen today. You have no clue what will happen any day. If you had a clue what would happen, you would be a multi-billionaire. US dollar Swiss going down, yeah. So this is, I mean, you can't, obviously, the ADR. I'm surprised I haven't had a message yet in Telegram. Normally on days like this, I get a message saying, my ADR indicator's broken. All of the lines are overlapping each other. Can you tell me what's wrong? We've moved up by more than 200 ADR. Therefore, the ADR low, which is 100 ADR plus 200 ADR, means ADR low goes above ADR high. I need to do a video and put that up as an explanation, because every time there's a 200 ADR move, I get at least one message or an email saying, why is it broken? It's not broken. It's telling you what's happened. But then again, I know the mechanics of it because I built it. But anyway, right. Anybody got any else? Well, it shouldn't be anything else to look at, should there? Because I've covered everything. But there might be one thing that somebody needs to look at. Thanks for subscribing. SL Bud Hire, if that's your name. Sorry, I missed you. You probably said that about half an hour ago. But thanks for subscribing. Gold, obviously. Anybody got any? Haven't looked at gold. Let's see if people have been learning while they've been here. Which way has gold gone in the last hour? No prizes, but... And don't look at your charts and cheat. It's like being on a quiz and asking a question and someone's under the table going, gone up, sir. I'll just give the answer away. So gold will obviously be rallying like a crazy nutter at the moment. Oh, hello. When the chart updates. Is gold gone down? Why is my chart not updating? What's going on with gold? My chart's broken. Hello, chart. Someone's broken gold. Oh, I haven't got gold. There it is. Oh, there we go. I was going to say, if that had been going down, I would be very confused. So gold rallying, obviously, US dollars dropping. Yeah. So US dollars had a rally off of FOMC. Gold drops. Gold does the opposite thing to the US dollar. So as the US dollar is now having a massive weak spell, gold is having a bit of a rally. Gold does move on its own, though. As you can see, it's not particularly strong against the US at the minute. Let's see if my other chart's updated. There we go. So from a gold perspective, we are contracting at the moment quite substantially. Yeah. So we've got a very large scale bearish symmetrical triangle pattern forming at the moment. So obviously it can't contract forever because it will just flatline then, which doesn't happen. So at the minute, with no indication of what we think is going to happen with gold, with oil, US dollar, this could absolutely go anywhere. So you can see obviously the move that we've had off of FOMC. We've had a big bull run on FOMC, and now we're getting slight bearish movement. So we are contracting at the minute. So at the moment, you can kind of trade gold in any direction. Yeah, so you're always going to be able to find a way out of gold at the moment because at the minute, the US dollar is just moving on news. So we will see what happens. Brian's got something in Telegram he wants me to look at. Oh, Brian did me a really good FOMC one yesterday. Look at John Wick's glass. He's got a pint on a wine glass. That's not right, is it? I bet you asked for that though, Brian, didn't you? What did you ask for? John is so damn drunk, he needs a stool for his beer. That's a good one. I like that. Before FOMC, after FOMC. Look at his glasses. They've melted. Look, there's the frame. There's no top frame on his glasses. How many fingers have you got on your hand, everybody? Not a trick question. You have 4 and a thumb. Let's count John Wick's fingers. 1, 2, 3, 4, 5. He's got 5 fingers. 1, 2, 3. Before FOMC, he had 3. So he's got so drunk, he's managed to grow 2 extra fingers. Brilliant. That's a really good likeness as well, isn't it? Of Powell. That's really good. I like that. I'm going to save that one. Good one. I like. Right. So we'll see how we get on the rest of today. So market's looking like it's wanting to retrace everything it's done over the last 24 hours at the moment. Fingers crossed, but we'll see. Powell got too many fingers in too many pies as well. Quite possibly, yes. These people in power, you know that whenever they open their mouth, they know that they have the power to make something happen. If you were Powell, would you not be going, okay, everybody, I see inflation dropping, but we're still going to put the interest rates up. Sorry, down. Wouldn't you, if you were Powell? You'd tell everybody you know exactly what's going to happen with the market because he moves it, obviously, every time he opens his mouth. But you will have your fingers in many pies if you were a Powell, wouldn't you? Wouldn't that be nice? Peter, hi Lee, my ADR indicator doesn't work. It's showing bad levels. Yeah, it's very funny. Once 0.3% of your position is taken off by drawdown control, does the next drawdown control take off a third of the remaining or a third of the original? Go and test it, AZ. I can't actually remember. Is there anything I can do this with? I honestly can't remember the logic. I'm 90% sure it's a third of the remaining position. It closes 1/3 of your open trade because every time you close a position, the MT4 terminal gives the new position because it creates a new position with a new order number. That order number is then uniquely treated by the EA. So you'll have to go and test it, but I'm 99% sure it's the remainder. It's 30% of the remainder. The easy way to test it is in the strategy tester. If you really want to know, go in and change the drawdown control setting to be percentage of ADR. Change that to 0.1, yeah, with a third. And what will happen is, as soon as you take a short and it pushes against you by 0.1 ADR, it will close out. And then as it pushes 0.1 ADR, it will close again. 0.1 R, it will close again. So as soon as you get one entry that goes, the market moves against it, you'll close out really, really fast. And you'll be able to see what those calculations are. But I'm 90% sure. I don't pay any attention to it. At the end of the day, drawdown control is a mechanism for reducing my pain level over time. I just want it smaller than it was. And I'm 90% sure that's what it is, but double check. I can't 100% remember. It's a long time ago since I made it. Is that you in gold suit? No, it's not. I wish it was. Email yourself to see why your chart broke. Yeah. I'm pretty sure I'll have one. It's either that or MQL5 Marketplace or Telegram, usually. And then I send people to the ADR reversal indicator page and say, watch the video. And everybody says, I have watched it. Then you should know why. Oh, watch it again. Oh, yeah. We don't read manuals and watch stuff, do we? If we did that, we wouldn't be men. Men are useless at doing things. We do things and then we read the manual to find out why the thing we were expecting to happen didn't happen. That's what we do. That's a man. Women read the manual first and get it right first time. AI just can't do hands. No. And you can't type. No. Asking because DD on its own managed to close out all of my GU position, which wouldn't have been possible if it was closing 30% of the remainder, as that would indefinitely leave a remainder. So the way the logic is programmed is if it has a 0.01 or see, now this is everybody contacting me on MQL5 saying their ADR reversal indicator is broken. If it's got an Yeah, if it's got a 0.02 lot open, it will close 50%. If it's got a 0.101 open, it will close all. So if you ask it to close a third of that, it will go, I can't. I'll close the next closest thing, which is a 0.01, which gets rid of the position in total. So it will indefinitely reduce the position down until you get to 0.01. That makes sense? You can test this in the EA, but that's basically what it does. A total washout today on the indices. We're coming up to we're 10 minutes away from 1.5 hours into the session. That is where we opened. That is where we are. That is where we opened. We're just about down there. That is where we opened. We're a little bit down on the S&P. So NASDAQ is pretty much sideways for the last hour. Dow, I mean, look, opened bearish, went bullish. Now it's trying to go bearish again. S&P, slightly bearish. So all I'm going to do with these three today, NASDAQ, I will see what happens. I'm just going to watch it for the rest of the afternoon. It's nearly 4 o'clock. I'm going out in an hour. So when I get back from going out, I will see where we are. If we are up here, I'm just going to move that TP actually. I'm on. Doesn't make sense to have TP up at that level, which is yesterday's low. Yeah. So it makes more sense to have TP somewhere around 4R. Because the most likely movement today would be a push into this accumulation, which is the Globex, most of the Globex session, and then a pullback from that. So that's what I look for to the upside. To the downside, we've pretty much tapped into ADR low. So, you know, there's just nothing there, is there? I'll leave the NASDAQ 5R to the downside. It'll either hit it or it will just close it out with a 1K loss. Dow. I mean, the Dow is moving a lot better. So I will target 4R on that as well, which is propulsion. Would you like to execute that move? Thank you. Jesus, how long did that take? Good job it wasn't the open. So target that propulsion gap. So assume that we're going to push up and find some sellers up there. That will be above ADR high. Pushing it, but downside, we've got a monthly low. So just going to move up above monthly low. So if we get a downside move, see if we can target that. And I'll adjust and look at this when we get back. S&P, again, just move it down a little bit in case we get a bounce out of that area. Downside, we haven't got any. Actually, we have got a monthly. Monthly's down at 5R, so I'll leave that at 5R. Assume we're going to get a flush and then a pop. Not a lot you can do with these indices today. Again, this whole week has been shocking for index trading. Very, very, very hard market this week. Not done bad. I'm down slightly on the week, but not bad. Just not made money. You know, one of them weeks. Peter, well, hey, made $140 on H1N5 back out of 3.5 grand loss. Good job. After you closed out all the other strategy. Like I said in Telegram, Peter, the best lesson you can learn is losing money. Sounds bad, but if you think about it, in every other industry or job that you try to do, you will have a cost. Yeah, if you want to become a brain surgeon, you've got to put 7 years, or any kind of surgeon, you've got to put 7 years of education in. You come out of your education at least 150 grand lighter. If you want to become an airline pilot, minimum to become an airline pilot is 100K. Then you're going to be earning 60 grand a year to start with. Well, 40 grand a year to start with, then up to 60 grand a year pretty quick. If you want to become a professional trader full-time, why do you think it doesn't cost any money? Yeah, the best education you can have is doing it wrong and not doing that again. If you get out of it with 3.5 grand, that's better than buying any course. It's truth. I've done lots of courses. I've bought lots of courses. And I've lost and blown lots of accounts over the years. I learned more from blowing those accounts about what not to do than any course taught me about what to do. So you learn by doing, and it's part of the education process. You can't do this for free. Everybody teaches you, tries to sell you a course for $500 or $1,000, standing in front of the Lamborghini. That Lamborghini wasn't earned by following what they did in that course. If it was, they would be doing it. Yeah. So again, after you've bought 3 or 4 courses, you learn that none of the courses are going to help you make money because they're all teaching you the same thing. Wrong. So, you know, part of the job, unfortunately. A lot of people get through it with 1 or 2 blown accounts. The unfortunates out there, like myself, have blown many. Just part of the course. Part of the job. Like you said in the Telegram group, I think, you've just been knocked back to step 1. You haven't been knocked back to step 1. That's not true. Yeah. You were there. After finding that, you're back here. But I don't think you are. You've probably gone and jumped off that step back up to here. Yeah. What you will do next, though, is that. You won't do that again. That's the blown account. You'll jump onto autopilot now and you'll go, I get it. But unfortunately, until you've been knocked back, you don't get it. Just that's why I made this document. But the thing about this document is it teaches people what's going to happen to them. But you will always be in denial about this until you've done it, and then you'll suddenly go, oh yeah. And that becomes a bigger eureka moment for most people when they suddenly realize it's not about knowing what's going to happen. It's about identifying it's happened, because if you can identify something that's happened, you won't do it again. It's like, I can't remember who it was. It was Socrates or Einstein or someone said, there is no stupid mistake unless you make a mistake twice. There's no stupid question unless you ask the question twice. If you do something and you cut your hand and you do it again, you're stupid. If you do it the first time, it's an accident and you learn from it. You learn not to do it again. If you do it twice, you're stupid. Yeah. If you hit this level, if you jump from this level to this level, fantastic. If you jump from this level to this level and get knocked back, next time you jump that level because you've done it. You won't do it again. Over leverage, increase size, too many aggressive positions, too big a lot size, too much exposure. There's a number of things that I teach in the bootcamp that are going to kill you. If you do them and you get killed, you realize why they're there. You understand I'm saying it for a reason, but until you've done it, you don't realize why, and you suddenly get that light bulb moment. And that's what learning is all about, the light bulb moments. You can learn as much theory as you like. You can learn how to drive a car. You can learn how to do an advanced driving course and drive at 70 miles an hour. The first time that tire blows, you're not going to know what to do. Your instincts might tell you to do something, but if you crash it into the wall, well, the next time you're doing 70, you'll look at it and go, I don't want to do more than 70, because if that tire blows at 100 like it did last time, I'm in trouble. You won't do it again. You've got to be burnt to learn. It's how we all learn as human beings. Unfortunate, but true. That's what learning is. But hey, the cheaper the lesson, the better. Absolutely agree. Being on a long walk and talk. Long walk and talk to yourself. Yeah. Talking to me made you feel okay. Yeah. Look at it as a tuition fee. Yeah. Unfortunately, it's not nice when you give your tuition fee to your broker, is it? That's the nasty bit. But that's the kick. It's like earning a load of money and having to give 40% of it to the tax man. It doesn't taste very nice, does it? When you lose money to your broker, it doesn't taste very nice. If you were losing, but you are losing money to somebody else, whether it's your broker or they're actually farming your order out to the dark pools and you're losing it to a bank, it doesn't matter, does it? Same thing. My ADR indicator doesn't work. That wasn't. Watch the bootcamp and read the manual again. Yeah. You'd rather pay me? Well, then I just become another tattooed, gold-toothed bloke with gold chains standing in front of a Lamborghini, don't I? those people are feeding off the people that have gone, oh, I've just lost my job. I really need to earn some money. Trading? What's that? Those are the people that the Lambo crowd sell to. The people that are, really? You can earn 100,000 a year by just taking one trade in 10 minutes a day using a mechanical trading system. Oh, it's $1,000. I'll get the credit card out. So you're starting your trading career in debt. We've all been there. I just don't want to become one of those. I'd rather not become one of those. And even if I teach you something that isn't a Lamborghini, I'm not promising the earth. Still part of the problem, isn't it? So I'd rather not do it. Personal choice. Anyway, Kajien RSI. God, I got out of that too soon, didn't I? So this yen looks like it's powering up quite nicely at the moment. So is this the start of the second retracement on the yen? Yeah. That's what we got last time. We got the warning shot. This is the third warning shot. Is it? Is it? Is it? Could be. We'll see. See what happens tomorrow. See what the Japanese say. Right, I'll leave it there. Anything you need, let me know. I'll be in the Telegram group. Swiss franc is still selling off nicely as well. If you're in any Swissies, it still seems to be doing pretty damn well at the moment. Completely undone that one, haven't we? Pound is holding as well. So all good. Everything's looking pretty good. Right, I'll be back tomorrow morning. No, I won't. Yes, I will. Yeah, tomorrow morning at 7:50 for the Frankfurt session. We'll trade the DAX. I'll update in the Telegram group what I'm doing with these indices this afternoon. I'm anticipating a 3% loss this afternoon. I don't think we're going to get out of these, unfortunately, but we'll see. And I'll be back tomorrow afternoon at 2:20 for the New York session as usual. Tomorrow morning. So yeah, good point. Yen. Tomorrow morning, we are getting the monetary policy statement and the interest rate. If that ever changed, the yen is going to go absolutely crazy. It's very unlikely. It hasn't done for 6 years. But then again, the Swiss weren't anticipating doing it today, were they? But they did. So very, very, very much doubt we'll get a change of interest rate. To be honest, hasn't happened for 6 years, so I couldn't tell you what would happen if it did. But yeah, there is a possibility. But we're more interested in this monetary policy statement. What are their plans? What is their outlook? Are they going to try and rally themselves? If they are, we'll probably get a big, strong move on the yen, and we might find everything is tanked against the yen when we wake up in the morning. So just be aware that's happening overnight. Any yen exposure you have, if you have it in profit, you might want to take it off, or you might want to break even it just in case it goes the wrong way. If it goes the right way, maybe move your TPs down another ADR. Because if it does push ADR, why not take double? Yeah. So be aware of that. We've got retail sales tomorrow morning for the pound ahead of me coming on as well. That press conference will be there. The Bank of Japan, they will be talking about FX movements in that as well. Maybe not now. Not now, it's coming down. And then 15 minutes after Frankfurt Open, we've got the Euro PMIs. So the Frankfurt Open tomorrow, quite possibly one of them. So be very careful of the DAX. Tomorrow, your choice. We know that during news events, you either make a hell of a lot of money or it makes a big loss. So be careful with it. Up to you if you want to trade it. It might be worth waiting until 8:15 and then taking the break of the 8:15 range. Take the break with the news. We'll see. But just be aware of that. So busy morning. And then we go straight into the pound, and then it's a busy afternoon because we've got the PMIs 15 minutes after New York Open for the US dollar. So that's what we've got coming up. So be aware of that, okay? I'll be back tomorrow morning. If you need anything, I'll be in Telegram. Other than that, have a good day. Keep your fingers crossed that these moves will revert, and then hopefully we'll be all right. Okay, have a good one. I will see you guys tomorrow.